things like that. Let's begin this conversation talking about the common challenges that people face when they are trying to cultivate financial wellness.
The common
Challenges. Like, what are the usual? I sit down and I say to myself, I want to do better with money. That is something a lot of people, several people, like, I want to do better with my money. What are the things I can do? But I'm ready to do it. But what are the challenges? What are the things that might just stand in my way doing better with my money?
The first I would say is mindset.
Okay.
Mindset plays a very big role when it comes to money. Apart from mindset, what you believe, what you've been told. We have limiting beliefs in our heads, or like I did a video this morning to post on my my Instagram handle, and I talked about one of the limiting beliefs we have as individual when it comes to money and making and multiplying money. Most times we believe we don't have enough, but the truth is you have enough, because every kobo has value. Do you know that for you to have 1 million naira is 1 plus 1 plus 1 plus 1 until you have a million? It's not 1 million. Money is not 1 million like that
on its own.
Yes, on its own is 1 plus 1 plus 1 until you have 1 million. So if you're able to gather that 1 plus 1 plus 1, it gives you much more. Then you're able to have plenty. So it's not in the little you have. It's not in believing that you have small. It's in your ability to gather and manage the little you have. So that's like a limiting belief most people have about money, that they don't have enough. When you talk about saving, they say, how much am I even earning that I want to start saving?
Absolutely.
But if you start saving 1,000 naira over a long period of time, before you know it, you've gathered something from the little you have. Then when you talk about investing, they're like, investing is for the rich. That's another challenge with people. They say investing is for the rich, but it's not in this age and time. Technology, everything, it has made everything easy for you. With as low as 1,000 naira, you can invest in stocks, not even Nigerian stocks. You can invest in stocks in the US, in India.
Let's talk about stocks. I have never been able to wrap my mind around what they are. I've heard conversations about them. I've heard people say, I think, what is the difference? First off, what's the difference between stocks and shares? These are words that they throw around.
Okay, so they are actually interchangeable. They are actually even the same if you look at it. If you're buying stocks or shares mean ownership in a company. So let's say Coca-Cola. Coca-Cola is a big company. When you buy their shares, it means you're being part owner with the company. That's just what it means. Okay, let me give you an example now. Let's say you start a business today and you're looking for partners to fund the business and all that. By the time they come, let's say they bring everybody brings 100,000 into your business. That means they have 100,000 naira share in your company, and that means they are part owners of the company. The only thing that happens is you run the company and you give them dividend. You pay them from the profit you make as a business. You pay them. So you're sharing profits with them. So that's just what stocks and shares mean.
So if I buy stocks, how do I make money off of it? Do I expect money every day?
No.
Do I expect every week?
No.
When do I get my money?
Good. So when you buy shares, there are two ways you earn from buying shares or stocks. First is by capital gain. Capital gain means Meta. Meta is a very good example. It just brought out the Thread app, and Meta doesn't pay dividend. Okay, so let me start with dividend. There are two ways.
Thank you.
There are two ways you make money from the stock market. It's either by the company pays shares or by capital gains. So let me tell you what dividend are. Dividend is profits the company shares with you. So Meta makes one good company that pays dividend is Apple. The Apple gadgets, Apple phones you use. So if you buy their shares, they pay dividend quarterly.
So every quarter you get money?
Every quarter you get money.
Till when?
Till the day you decide to sell off the shares. And you can sell off at any time.
So say I put in $50.
Yes.
You can get as little as that.
In fact, say you put in $1.
How much am I expecting at the end of the month?
So
at the end of the quarter?
Apple pays 0.50% of what you put inside.
So every quarter you get that.
Yes, every quarter you get that. So that's one way you make money. So Apple makes profit and then they share with you. So that's what dividend is. Simple.
So it's basically like your money working for you because you're not doing anything.
Passive income. We call it passive income. So you just put the money, the company is working, they're doing everything they can do. You just put your money there and then it keeps rolling out. Then the second one is the capital gain. So capital gain is when the company doesn't pay you dividend, but the stock price appreciates. Like Meta appreciated like how many percent within days because of Thread.
Because of Thread.
Good. So it means that because your share price increased, maybe it was $1 and then it increased to $5. So the difference between that $1 and $5, that's $4. You would have made a profit of $4. So that's
on
just
every
on
dollar.
Every dollar that you
then they send the money to you when? Every quarter?
It's automatically in as long as the share price goes up, the money is there. So you can decide to sell the shares off.
Okay, so when you decide to sell off your shares, that's when you make your money.
Yes.
So
as long as you don't sell and it keeps increasing, your money keeps increasing. But once it increases and you sell and you don't buy back, that's all.
So what happens when it reduces? Because this is now sounding like, oh yeah, it's gonna increase, but we know that these are risks.
It's a business, and every business has its up and downs. There are good days and there are bad days. When the stock price decreases or something, it's not that's why we don't advise you buy shares for short term. We advise you buy for long term, minimum 5 years. Why? Because over time the market evens out. You get, the company cannot be down for 5 years except if the company is going to go bankrupt. You get, so if you wait out when the company is down, it comes back up and then you make profit. But if the company goes down and you panic and sell, that's where you even lose more.
Okay, now let's talk about how do you develop these habits? What is the major, I'm going to ask this question like this, what's the major difference between the rich and the poor? You hear stories of people that built from absolutely nothing. Absolutely nothing. They probably started as bank clerks, earning in their day 20,000 naira, and you look at them now and they have so much more. I'm not talking about people that are putting their hands in dirty. There are people that genuinely. What is the difference between those people and the people that remained? You see two people, they have, take for example, federal government jobs. All of them are put in the same amount of years. They have the same, they are on the same level. They earn the same thing. At the end of their service, one person is retiring really well. Another one is retiring blah. So what is the difference between the two of them? What did one do that the other didn't
do? Investing. That is just the difference between the rich and the poor. The poor saves. They save their money. And you know what? With savings, there is no interest. The interest is very low. If you put your money in the bank, you're not getting any percentage. How many times has your bank paid you interest?
But then people argue my money is safer in the bank.
Yes, it is safer. But if you want to be rich, you can't play safe. You have to take risk. Risk is an important part when it comes to wealth building. If you're not ready to take risk, you can't build wealth. And the way to do it is by investing. That's why you see people go into day trading. Day trading is high risk, but at the same time the reward is mind-blowing.
Let's talk about day trading now that you brought it up. These are terms that personally I've heard. Finance is not something I'm very skilled at. We were just having a conversation about how I just recently started taking control of my finances, and I believe that it's a gradual process and I'm growing through the ranks. I've heard day trading, especially on Twitter, and people keep throwing it around, and it's like there's just a small circle of people that understand what they're talking about. What is it to the layman on the street?
Good. In fact, the post I just made just now, I did a video just this morning and I posted it on all my social media platform, and I talked about the difference between day trading and investing. When you talk about day trading, you're talking about buying and selling within minutes and hours. So you're sitting down here, you're on your laptop, you're on your system, and you're buying asset classes. You're either buying stocks, you're buying currencies or something, but you're trading. You're buying and you're selling, you're watching the market, you're timing it. There's a time it comes down. The stock market is very volatile. So it comes down, it goes up, it comes down, it goes up. So you're timing it. When it goes up, you sell. When it comes down, you buy. That is trading.
And
And
you
it is
keep
legit.
doing that.
Good. It is legit.
Absolutely legit.
It is legit. It's just that it's very a high risk because you can lose everything in seconds. So the difference is, then when you talk about investing is you buying shares or buying asset classes and you're leaving it for at least 5 years. Then you allow time and compounding do the work for you.
Wouldn't you advise someone to do, the investing where you are getting dividends? So maybe at the end of every quarter you're getting something, as opposed to when you're just waiting.
In fact, do you know that different companies pay dividend quarterly, but the dates are not the same. So some are paying in January, some are paying in February. Their quarter is
So
in
if
January.
spread
You
your
can
money.
spread your money, whereby every month. That's what I teach in my investment class. I do investment classes, and that's what I teach. So we arrange your portfolio in a way whereby you buy stocks, and every month you're being paid dividend.
So I'm trying to dumb this down to our everyday
Daily
life,
life.
because take it or leave it, Nigerians are currently being hit with one of the toughest times in our history. The naira is
Always,
floating. The fuel subsidy is making life
Inflation.
difficult. We're inflated. The economy there's crisis. There's problem.
It's not stable.
You know how they'll say
Yes.
there's problem.
Yes.
My people in the southern part of Nigeria, I think in Wari, they will say Oturu Beke. It has Beke. It has there's a problem. If I want to spread my, what was it you said, portfolio,
Yes.
in a way that I earn monthly,
Yeah.
how much investment am I looking to put to be able to earn every month, say as little as 10,000 naira?
Wow, that's a lot of money. Because if we did an analysis last year, and then if you want to be able to make 1 million naira from the stock market yearly, not monthly,
Yearly.
now, yearly.
So that would make it quarterly 250,000. No, quarterly 250.
250,000.
We have 4 quarters or 3
Yes,
quarters? We have 4
4,
quarters.
yes.
Yes. So quarterly 250,000. Yes.
So if you want to make 1 million naira every year from your portfolio, you have to be willing to invest about 10 million plus.
To make 1 million.
Yes, as profits.
You see, now this is going to bring us back to your intro where you said it's tiny.
Yeah,
You don't
the
just
tiny
immerse,
droplets you put.
You don't
yes.
immerse wealth
that
overnight.
That one is for those who have the money. But for you who doesn't have up to that, you can start little. You can start gradually. And then remember, you're actually investing for your future self. You talked about the difference between the rich and the poor. One ends up after they retire, one is rich, the other is not. One had a retirement plan. We have a very bad culture in Africa where we are depending on our children for they are our retirement
plan.
They are the retirement plan. But the truth is, you're supposed to be able to plan for your years of rest, because your retirement is where you're supposed to rest. It's not time for you to start hustling. So you're supposed to be able to plan for your retirement from when you are working, and you start saving a portion of your income from when you are working. So over the years it builds up, because you're not saving it. It's not savings, it's actually an investment. So it compounds, and after when it's time for you to retire, you have more than enough to live off on.
Let's talk about living below or above your means. My mother would always tell me growing up, you're always living above your means. You've known me for a bit.
Yeah.
People would say that, right? I like the baby girl lifestyle.
Everybody does.
No, I really like the baby girl lifestyle. I really do.
Yeah.
And one of the problems with that is, how do you know that you're living above your
Your means.
as opposed to living below your
your
means.
means.
I'm going to break it down because
Okay.
it sounds very broad. Let's start
I
with rent.
understand. Yeah.
Let's start with rent.
Yeah. Yeah.
I have a godfather / mentor in
Okay.
life, and he will tell me your rent should be your 2 month salary, your 1 year rent, your 2 month salary should be able to cover it. Otherwise, it's too expensive.
Yeah. That's the rule. That's the rule by finance. Your rent should be your 3 month salary.
Okay, 3.
3 month salary.
Oh, okay.
Yes. So if you cannot gather your 3 month salary and pay your rent, you're actually
Conveniently
living
above
yes
your means.
above your means. But guess what? This is what I tell. This is one formula that people are not really aware of. For you to pay your rent, instead of gathering your 3 months rent, you can do that. You can gather your 3 months rent and pay your rent when it's time. Or better still, you divide your rent by 12 months.
And every month.
And every month you save what it is. So if your rent is 100,000, if your rent is 100,000, you divide 100 by 12.
Let's do this math as
Very
realistically as
yeah,
we
let's
can.
do it.
Especially we're in Abuja.
Yes, let's do the rent.
100k
Okay.
house in Abuja
It's
is not a house.
feasible. It's
So
not.
let's say the average rent for a self-contained somewhere in Abuja 500,000, 550,000 naira.
So let's do 500. So 500 divided by 12. So 41,600. So every month from your salary,
You should be able to
you
keep
should be able to save 41,500
For
and
your rent.
yes, and you know what, instead of just putting it in a savings account, it's better to put it in a high yield savings account. Or
No,
you
before
put
we
it
before we you have mentioned high yield savings. Let's
Savings.
explain what that is.
okay, so the traditional bank is not a high yield savings account, but for apps like OPay, PalmPay, they are high yield.
Let's not
Yes, let's not
advertise for them.
Okay, so like for fintech apps,
Thank you.
they are high yield savings account. Why? Because per year some go as high as 10%, 12%, some
But is that not
15%.
risky?
No,
Considering
it's
that
not.
most of these fintechs, I had a conversation a few months ago with my accounts manager, and she said, "Babe, we have a good relationship. Over the years, we built a
Yeah.
relationship." She's like, "Babe, I noticed that there's an amount of money you're always sending to one of these fintech. Are you saving with them?" And I'm like, "Oh yes, I am." She's like, "What if one day these people up and they disappear?" I know that when there's a particular, I'm going to mention their name because I think they're
They
the only one
folded?
doing. No, they didn't.
Okay.
I think they're the only one doing what you're doing.
Okay.
No, I wouldn't mention their name. It's still going to be advertising. They're not the only one. Now I remember. But they are a savings app.
Okay.
They're a savings
Oh
fintech.
yeah.
And
they're like they're like one of the first who started.
They started it.
Yes.
And when they started it, I think I was in Lagos at the time, and I started saving gradually. I didn't continue. Trust me, my saving was saving my life.
Yeah.
A lot of people. I remember there was a trend on Twitter when they had a glitch and the app wasn't